Hello guys, welcome back to my YouTube channel. And today, in under about 2 to 3, maybe 4 minutes, I'm gonna go over the 3 reasons why the stock market is falling today. And today is December 17th, 2021. So I'm gonna get right into it, guys. I won't waste your time. So the number one reason why the stock market is selling off is Omicron. Omicron, Omicron. That's how you say it. Number one reason is Omicron. So pretty much we have a new variant that's going around and it's scaring a lot of people, right? So based on this New York Times article, New York hits not COVID-19 case record as Omicron looms. So there's a lot of cases going on here in the United States, and it's gonna keep spreading, especially around the holidays, getting in touch with families and friends and going out and to eat and hang out at the bars and stuff like that. This is not good for the markets. Our stock markets is very sensitive whenever there's uncertainty. It tends to have a choppy market condition. And things are selling off because of that. Okay, guys? So if you're looking at your portfolio, you may be sick to your stomach, but that's because of the Omicron virus going around. Also, the second reason to do with this market sell-off has to do with taxes. A lot of investors are selling stocks to pay for taxes at the end of the year and so on and so forth. So a lot of sell-off has been going on the first couple of weeks of December, and hopefully at the end of the week it should stop as far as like the selling pressure from taxes. As we heard, like Elon Musk is selling a ton of shares of Tesla so he can pay his taxes as well. I'm talking about billions of shares, and he still has a lot more to go. And the third reason is rates. I've gone over rates several times before in my previous videos. Where to go? So a third reason is interest rates, guys. So as interest rate goes up, as we fear that the Fed is going to increase interest rates, is going to cause the markets to sell off. But the Feds have to raise interest rate because we're seeing super high inflation. As we see by our article here, Ray Dalio, which is like a famous hedge fund investor, so he's a multi-billionaire, pretty much saying that the Fed's hands are tied and higher U.S. inflation is sticking around for a while. And pretty much here he tells investors to avoid holding cash and keep an all-weather portfolio. So if you can't hold cash, you can't hold stocks. So what can you hold? So that's the thing. We have a lot of cash in the sideline, about $5 trillion, but the market is actually selling off because investors are scared. But let's take a look at the indices and how they finished today. So as you can see here, we have the S&P 500. We finished down 1%. Dow Jones also bled down 532 points, which is 1.4%, 1.5% if you're rounding off. And NASDAQ is also down by 0.7%, 0.07%. So guys, the market wasn't good today, and we might continue to see this kind of slow sell-off, stagnant market until we get some clarity on this virus that's going around right now. So a lot of the big stocks that I wanna dive in really quick is Apple. If these stocks finish red, most likely the market's gonna finish red because Apple's like almost a $3 trillion company. See. Apple had a bad day today, but it's up in the after hours. And then we could take a look at Microsoft. There we go. Microsoft is also red and down as well on the day, but slightly up in the aftermarket. And then Google. Those are the top names in the market, guys. So if these names finish red, most likely the market's gonna finish red because these companies hold a lot of weight. Okay, so this is pretty much the market update. I'll drop another video tomorrow and also Sunday and also on Monday. So I'll be dropping these consistently just to keep you guys updated on the market going forward. Thank you.